Welcome to Virtual Investor Conferences. We're very pleased you joined us for our quarterly Small Cap Growth Conference. The next live presentation is from Monumental Energy. And Monumental Energy is an exploration company focused on the acquisition, exploration, and development of oil and gas properties. Please note, attendees may submit questions and view a presenter's availability for meetings by clicking the question and book meeting tab at the top toolbar. At this point, I'm very pleased to welcome Maximilian Sali. He's the Vice President of Corporate Development of Monumental Energy Corp, which trades on the OTCQB venture market under the symbol MNMRF and on the TSXV under the symbol MNRG. Welcome, Maximilian.
Thank you, John, for the introduction. Thank you for having me. It's been a successful year so far for us. We've had the biggest volume on our OTC listing in we ever had. We've had a pivot recently, and what you see on this first slide here is global liquids and lithium. We came from lithium. We have some properties. I ended up doing an investment into oil and gas in New Zealand, out of all places. It's a very niche market. But one thing to highlight, as this is our main slide here, the front page, very important, is what you see in the background here is the Copper Moki workover wells that we'll be doing. So you have about 10 million US worth of infrastructure right here. What you see beside those two stainless steel big tubs is the workover wells that we'll be doing. And so this is a great photo. We had to do some due diligence on this property back in September, so I took this photo. But what we're going to do, and why the stock's been performing so well this year, is re-enter these wells. There were mechanical issues, and get the oil flowing again. These wells produce about 1 million barrels to date in a very safe jurisdiction where everything goes to market, and you're getting near Brent crude pricing, which is 82 US now. And so, being in a stable country like New Zealand, with the gas price being as high as it is, it's a great place for us to work. It was a good pivot, and we'll get into that high level very shortly here. So I'm just going to go right to the assets, because I think this is the most important thing of what we're doing. So Monumental has had a few, rebirths. We came trading, did an IPO in 2021. We were a gold asset. We had a gold asset, went into critical metals, which included lithium. And then we ended up having excess capital. And what we did with that capital is we invested in a company, which we got a waiver from the TSX. Usually junior companies can't invest in other companies unless you're a tier 2 investor or investment issuer. So we got a waiver with the extra capital. We invested in a company called New Zealand Energy Corp. And they have a well right now, a gas well that's tied in to production to this facility you see here. If you wanted to replace that facility today, would probably be about $100 million US for all the infrastructure. They own 50% of that facility. They are flowing gas, and what their game plan is to pay a dividend to shareholders, i.e. Monumental. Following that transaction, we did a deal that we just closed December 31st, where we now have a 25% royalty agreement on 2 wells. And how that agreement works, and I'll just slide down here. Again, beautiful photos of the facility. But the nice thing about this investment is that they are focused on gas. In New Zealand, you're getting about $15 US per MCF, substantially higher than you're getting in the States. They are having a gas shortage. But what we're doing is we are funding the workover of these oil-specific wells. There will be some gas in there, but we're getting Brent. We'll get 75% of our payback first, and then go into a 25% royalty. The nice thing about a royalty agreement for us is there's no risk. All costs following production go to New Zealand Energy, and for as long as these wells produce, we'll receive 25% from the net at the end of the day. And all of this oil gets trucked 3 kilometers to their facility that they own, and everything goes to the New Zealand market. New Zealand's a very specific market. There's maybe 4 or 5 million people in the whole country. But back in about 2014, the government said we were going to try and have all clean energy, so solar power, hydro dams, and that didn't work out. So New Zealand's having rolling blackouts now and begging for people to drill new oil and gas wells. And that's what we're doing. And so after following these reworks, what the plan is to partner with our partner, New Zealand Energy Corp, and drill more new oil and gas wells, which are not very expensive. And so, you know, when you look at assets, this is their gas well they just finished drilling. That rig is now off-site. You know, when you look at oil and gas and you look at our stock performance since the start of the year, we were 5 cents Canadian. I think we're 3 cents US, went up to about 14 or 15, 16 cents US off of the news. It's been good news. You know, having the ability to go into a country, have an operator, and have a government that wants to give you permits right away to rework wells, to drill new wells, is significant. And so having a facility also to be able to put that oil into is huge. You know, the difference between conventional and unconventional oil is, if it's unconventional, you know, for example, if you're in Africa and you find oil, well, you got to shut it in, and then you got to go and build some type of infrastructure if it's in the area. That could be hundreds of millions of dollars. So for us to be able to have the opportunity to, one, become one of the largest shareholders of our partner, New Zealand Energy Corp, and two, now partner with them on wells, our junior companies, small market cap, will have revenue. And then in the near future, in very near future, I would say H2 2025, drill some new wells. And these wells are not expensive. You know, on a high level pitch, I guess, you know, you're spending about 3.5 million Canadian dollars to drill a brand new well off existing permitted pads. Those wells, historically, from past producing wells that New Zealand Energy Corp and other former juniors in the space have produced, come on at about 500 to 1,000 barrels a day. And so your payback is significant, especially now that you have the facility to use. And one thing to note is all of our input costs are in New Zealand dollars. If you look at our last press release, we've every few weeks we advanced our partner about 100,000 New Zealand dollars. It's about 82 Canadian. And so when you do your conversion and you're getting Brent crude pricing, all of your output costs are in US dollars. So a barrel of Brent could be $82 US. That in New Zealand is $144. So when you convert that to my balance sheet at the end of the day, is bloated and looks very good. And so having the opportunity to invest in a company and now partner with a company with a production facility where everything goes to market in a niche market is very good. You know, obviously being a Canadian company, everyone wonders about tariffs. If I'm producing oil and gas in Canada, and we do have those tariffs, they kind of have gone on and off the last few days, we're going to get dinged pretty hard. But in a country like New Zealand, we're stable. There is none of that. We're getting top dollar for both oil and gas. And I think that's very important. Let's see here. We do have some lithium salars. I sold my last lithium company to a producer for about $70 million back in 2020, just before COVID. If you held onto those shares, the company was called Alchem, and now it's been bought out by Rio Tinto. That would have been worth about $400 million in 2022. So good run. I went back into lithium. The lithium space has come off. We still have very good lithium brine salars. Brine salars are the most efficient and economical types of lithium to produce. We still have them. As the price of lithium comes back and we have oil revenue, we can go back and try and work on those projects. But our main focus now is on the oil and gas. And interesting enough, so one of our projects, our big lithium project, has an asset or a mineral called cesium. And cesium is produced only by one company. It's a private company. It's Chinese. It's produced in Manitoba. It's called the Tanko mine. And cesium is used in offshore oil and gas drilling and onshore. It's used as a lubricant. It is so expensive that companies rent it and send what they can recover back. So very, very tight market. And we have a ton of this in the sediment on our project, which we hope to get going because that would be a great source of cesium for South America. I want to say one thing too about the share structure. I am the single largest shareholder. I've bought more than half of my stock in the market at a lot higher prices than today, all the way up to 70 cents. You know, we have a very tight float. We're doing a small financing here. Even after that, we'll have under 70 million shares out. We have cash. We have securities in our partner that are free trading. They will also pay us a dividend, a very good share structure. And I think, you know, we're very liquid too, which is good. So if you look at our performance on the OTC market from January 1 till today, I think investors appreciate the fact that they can invest and stay liquid. You know, it's hard to keep investing in a company where you can't get in and out. You want to be able to have that liquidity. In the States, it's actually better because for bigger cap companies, you're required to have at least one or two market makers to provide your shareholders with liquidity. In Canada, you're not. So for us to be able to have this liquidity really bodes well with shareholders. And we have a ton of good, I think, good news to come. I think what you're going to see next for us is we'll be producing gas and oil next month, end of March, and then we'll be looking to drill our own new fresh wells. So, you know, I'm sorry, just getting a couple of questions in. Might as well answer one. Speaking of fresh wells, so the workover wells should flush produce about 300 to 400 barrels a day. We'll get 75% of our payback first, and then get 25%. But what will follow from that are drilling new wells, and these new wells come on at 500 to 1,000 barrels a day. So your payback is very quick. It just gets trucked right to the facility. Those wells will tend to settle at between 300 and 400 barrels a day. There's a lot of historical evidence in the area from other wells that show that. So we could keep drilling with the cash flow. But being able to drill off permitted existing pads makes a big difference. We're not going into a new area and applying and dealing with landowners and different landowners and then dealing with the government. For us to get consent to put these two wells back into production, the government of New Zealand took 4 weeks only, which is fast, which is very fast. They need the oil. They need it right away. They need it now. And to the point where we're in discussions that the government may finance part of these wells just to get more oil and gas. If you look at New Zealand as a country, you know, Australia produces a ton of this, but you're in the middle of nowhere. So everything you produce onshore stays in the country. Otherwise, this is why it's so expensive. I see here, what are my key milestones? So in a perfect world, my key milestone will be by the end of this year, producing over 1,000 barrels a day. And that's not unreasonable because that could be our workover wells plus 2 new wells. These wells will come off as they typically do. They're smaller reservoirs than you would have in different basins. We would obviously do fracking like you would in Texas. But, you know, getting a Brent crude price, your payback's quick, and you can drill multiple wells off existing pads. So if we're having success and there's another part of the reservoir we need to enter with the second well, that will keep our production up and our flush production up. And the capital is not very expensive. You know, I'm a shareholder of a number of oil and gas companies, and some of these gas and oil wells cost $10-15 million US to drill, or more, depending where you are. For us to be able to spend $3 million US or less to drill a new well and get that kind of production, it's pretty impressive. And, you know, historically, if you look at a company called Tag Oil, this is why I'm back in New Zealand. I was 21 years old. It was 2009. We were buying the stock at 10 cents. And in 2012, it was $11. And then New Zealand Energy Corp, which is our partner now, this is the rebirth of them, came out in 2011 at 25 cents privately, went to $4, bought this facility. So those were big wins, and I think it's kind of the rebirth of New Zealand. Now the government wants more oil and gas, and I have all the existing data to show how these wells flow, what it costs, how the permit process is. It is quite easily. So I see here a question, capital raises. So right now, we are doing a small raise. It's a life financing. We have announced it. It is on our website. It's on CDAR. It's filed. We sent it to the Canadian markets. The U.S., this SEC doesn't like these little life financings is what they're called. We're just trying to top up the till enough so we can do some DD on bigger targets. But anyone can participate. Americans, it doesn't matter where you're from, you can participate. And so it's small. We're doing $1 million to $1.5 million Canadian right now, just so we can get some due diligence done, maybe do some initial deposits. Then once we get our revenue from the workover wells, we'll use part of that revenue to decide on new targets. And what I would say the best case for going forward was something like a convertible debenture where we have production, where I can raise a couple $1 million on an 8% debenture based on production, drill new wells, and my goal would be to pay shareholders a dividend, essentially, and that's what our partner's goal is too. How does the permitting process differ? You know what? I've never dealt with the permitting process in the US or Canada. Canada, getting anything done is difficult, very difficult. Doesn't matter what you're doing. Because a lot of these assets, they're past producers, the permit process was very quick. It took us 4 weeks. I have the letters, so it's called NZPAM, that's the government government office that grants you your license to produce. And so the nice thing about New Zealand Energy is most of their permits are licensed to already enter. So all we have to do is put the drill rig on site and inform the government that we're going to drill. They'll come back with comments, but they're already permitted, and then we begin production. So it's quite a good process. 10 years ago, it would have been different. When oil and gas collapsed in 2014, everything went down. And New Zealand kind of went, we're going to try all these new clean ways to get energy, but hydrocarbons are not going anywhere. I think the U.S., 42% of their energy comes from gas alone. So I think it's something where, you're going to need it. It's there. There is an abundance of it in this region where we are in New Zealand, and you're getting top dollar for it. So it's a good business model for our small company. The permitting process is easy. Your output costs are in USD. It's a good business model for a small Canadian company, and we're not affected by anything going on between Canada and the States. We're in New Zealand. So very proud about that. There's a lot of potential, and I think there's a lot of things that I can't say, but we're working on a number of things. If you go to the New Zealand Energy website and look at their presentation, they have a list of workovers that are possible. And I think what you'll see is Monumental farm in on more of those workovers as we see success with these workovers. And so also the new wells, everything is very close to each other. The facility is in good condition. As you saw from the first slide, everything is in good working order. And eventually, when our original workover wells do run out, we can move that infrastructure to a new site and not have to replace it. Timeline to bring on second well. So the first 2 wells should only take about 3 weeks. They were shut in due to equipment failure, not well issues. So we have ordered a lot of those parts. Most of the parts are coming from Australia. Once they arrive on site and everything is there, we just use a crane to take out some of the old tubing and replace it and then put things back online. I was there in September. There's still pressure there. So everything's shut in and the pressure's good. It just needs, after you've had this tubing in there for 15 years, you're going to get corrosion and they just have to be replaced. Simple as that. They didn't have the money. Now we do. Timeline for getting our, after that, putting a new well online, a brand new well from an existing pad is fairly quick. Getting an oil rig in New Zealand is not that difficult. There are a number, most of them are big private companies. There is offshore gas production, some onshore oil, but finding a rig shouldn't take any more than 6 weeks to get the rig there. There's a lot of people willing to work in New Zealand in oil and gas in the sector that know the space. And it's simply a matter of, once we get this production, figuring out a target. And what will the market see is you will see, we will announce a couple of ideas that we have. We'll show you the targets that we want to drill potentially, and we'll see which shareholders, which ones they want us to drill. And at that time, later on, we'll have to obviously do some form of capital raise, whether it's a debenture or something else, or bring on a partner. But there is money available because when you're making that kind of revenue that quickly, unlike mining, which a lot of the companies that are in Canada, you hit a good hole, that's great. In 10 years, maybe you're in production, even if your resource works. So, oil and gas it's a lot quicker. You get your good revenue, and we're getting top dollar for it. So I'm very excited about what happens in this first half. And like I said, I'm the biggest shareholder. I walk around all day touting my stock. I got my Monumental hat on. It's all I wear. And this is what I do full time. So I love what I do. I love this company. And I look forward to bringing more shareholder value through the rest of the year. And I think that's capital raises needed. Yeah, I mean, if we did do a raise later on in the year, somewhere in the probably 4 to 5 million Canadian range, which is really not a lot of money, especially when you convert to US dollars. The US dollar is so strong right now, it's unbelievable. But all of our input costs are in New Zealand. So it really is a good bang for the buck. And otherwise, thank you guys for having me. I've been very, very happy with how our stock is traded on the OTC this year. I look forward to, and I always like speaking to American investors because they understand oil and gas and they get it and they get what we're trying to do. So even though we're not in the US doing this, we're in another country, but we're getting Brent crude pricing and we're getting a much higher gas price. So it's a compelling story. And as long as I'm not aware of anything, I'll keep buying stock in the market like I have for the last 4 years. And thank you very much.